Okay, what is going on, traders? Super excited for today's video. I'm going to give you guys an update on ticker symbol XLM. Now, this one was actually a viewer request for me to do this video. We're going to look at the daily chart. So keep in mind that I do those viewer requests every single week. So if you have any cryptocurrencies you would like me to make a video on, feel free to let me know down in the comments below. We'll jump straight into it. Okay, if you find anything useful in this video, you learn anything new, please like, all right, and subscribe to the channel. All right. So the first thing I want to show you guys is going to be this bear flag right here. All right. So you see we have our flag pole. Okay. And then we have our actual flag. So a bear flag is indicated by a sharp move to the downside. And then you get this little consolidation channel, this little period where we're moving sideways, absorbing that price action. And once you break the trend line to the bottom, you can expect to see a sharp move to the downside, right? Now, shortly after that, we did get a pop. All right. So, if we look at the move, okay, from here to there, right, that was about a 26% drop. And then we actually got a very, very nice rally. All right. That ended up going 87% up to the highs. Now, the way that you could have signaled that, possible bullishness is something called divergence. Okay, so we have the relative strength index down here. It's going to measure the relative strength of any given token that you're looking at its given price level. So what we're seeing is we're making a low and then a lower low, right? We're clearly in a downtrend. And then we have a low here and an equal low here. So as the token is dropping in price, the relative strength is not getting any weaker. All right. That's a divergence right there, a bullish divergence specifically. And then when you combine that with this chart pattern here, known as the cup and handle, you actually have two things combining, right? So in this video, we're going to go over so much, right? We're going to go over chart patterns, divergences, and you'll see, all right, there's going to be so many examples that once you have certain things combined together, right, once you can get a chart pattern, a bullish chart pattern with a bullish divergence, or a bearish chart pattern with a bearish divergence, it's going to give you that edge that you need. Okay, because trading is like going to battle, it's like going to war. You really need an edge, and you need to have the right weapons at your disposal. You can't be going into there, empty handed. Okay, you can't go into battle empty handed. So we see that the price of the token goes down, and then we see that we have a bullish divergence. That's our first indicator, right? And then we notice that we have the cup and handle. We get a very nice breakout of that trend line and a very sharp move to the upside. Now, the next example we're going to look at is actually going to be the exact opposite. All right, and it's going to be a bearish chart pattern combined with a bearish divergence. So again, combining signals to give you more confidence in the play, and let that, all right, well, we're either supposed to have a nice pop or a nice drop in the next coming few days of trading, right? So this is really almost like a full-on swing trading tutorial. By the time you finish this video, you're going to learn a lot, right? So here's our pattern. We have a left shoulder, we have a head, we have a right shoulder. Okay, that's a head and shoulders pattern. It is a bearish chart pattern. And then we have this right here where we make a high and then a higher high, right? So clearly the token is in an uptrend going up in price. The strength of the token should follow that, right? But actually we have a high and then a lower high. So that's a bearish divergence combined with a bearish chart pattern, right? So we see the bearish divergence right here. We get our initial drop, okay, from those highs down to the lows. That was about a 20% drop. And then we see it bounces and forms the right shoulder there, and we end up dropping 36%. All right. So again, combining signals together to give yourself more confidence, right? Bullish divergence, bullish pattern, bearish divergence, bearish pattern. We can come over here, and yet again, we have another great example of that. So what we're seeing is a pattern known as the falling wedge. All right. And so the price is going to consolidate in between these two trend lines. And with this pattern, you're looking for a break of this trend line to the upside, right? Now, again, we have a low here and a lower low here, and you can see that the relative strength index stays very flat. Okay, we bounced on it once, we bounced on it twice right here, and ultimately we got a very sharp move to the upside. Okay, now we did drop very quickly after that, but again, notice we have a low here and a lower here. We have a low here and a higher low here, and it's at a much sharper degree going up, right? So we're seeing that, okay, well, we just had this pop and then it just reversed and dropped, but the relative strength index is much higher. It's got a bigger bullish divergence, okay? And then we get a very nice move to the upside. All right, and boom, that right there was 75%, roughly 70%, we'll just call it. And then what do you know after that, right? We're seeing another signal. We're seeing bearish divergence now. Okay, we have high, higher high, we have a high, lower high. All right, so we get our sharp drop down there, and in that process of dropping, we create the wedge pattern again, get a very nice breakout to the upside. And again, you can use that bullish divergence to really help you guys out. All right. Right here, we have a head and shoulders. And, a lot of people can get confused sometimes by these crazy, insane wicks. But, pay attention to the bodies of the candle too. All right. So we have a left shoulder right here. We've got a head, and then we've got a right shoulder. You can see we come down and play that move out very nicely, ultimately, and then fall even lower after that. All right. Now, from this low to this low, we actually create a bullish divergence. Okay. And, hopefully you're starting to recognize the trend now, right? And it's not too hard. It's actually a little simple once you start to get the hang of it and once you start to know the right signals that you're looking for. All right. So if you're liking everything so far, subscribe to the channel because I'm dropping videos like this every single week. And we'll continue on, right? So we have a low, we have a lower low, we have a low, we have a higher low right here. All right, and we get a very nice move to the upside, and then we start bull flagging. Okay, so it's the opposite of the bear flag that we looked at earlier. We get a sharp move to the upside. We get our channel right here, our consolidation period, absorbing that sharp move to the upside, and then we get a very clean breakout to continue the bull pattern, the bull flag pattern to the upside, right? And then we start forming a little bit of bearish divergence, all right, where we have a high, higher high, high, lower high. We do get a pullback after that. But one thing you can use to your advantage to figure out if something is in a strong uptrend and it's just doing a retracement is you can use the fibs. Okay, so you can use this tool right here. And what we're doing is we're taking the swing low down here up to the swing high right over here, right? And so we're going to see, all right, well, we have a bearish divergence right here, but I want to know if we're just going to pull back slightly and continue this uptrend. All right, because nothing moves in a straight line up, it's going to retrace and then continue higher. If we break these three levels, 38.2, the 50%, and the 61.8, the 61.8 being the most important, kind of like the make or break level, it's known as the golden ratio. Then we can assume that we're in that strong uptrend and that this was just a healthy retracement, right? So, from that low, we come up here, we get a nice bounce at the 38.2. Okay. And again, the wicks come down here, but the body stays right here on the candles. So that's a very strong uptrend when you bounce on the 38.2. And again, we do continue that move upwards. And what we see is that we end up forming another bearish divergence after that, right? So we have a high here and then another higher high. Clearly, the token is in an uptrend, is going upwards, but the relative strength of the token is going down, right? And you don't want to see that, unless you're looking to take some profits, right? This is a good signal for you to protect the trade. So we just came in here, we made this very good trade because we saw that it was a healthy retracement. We got a continuation of the bull move, and then now you're seeing some bearish divergence. You can protect your trade, take some profits, or set a stop loss once you start to see these signals, okay? And then shortly after that, we do what I was talking about, where we start combining signals together. And in this one, we have the falling wedge, bullish chart pattern that we went over. We get a very clean break to the upside. And we also make a low and a lower low on the price of the token. But then we have a low and an equal low here. So the token is dropping in price, but it's keeping its strength. It's holding its strength, bullish divergence, right? We'll come over here and we'll look for our next patterns and signals that we had. And it was actually just some more bearish divergence. All right. And I just want to show you guys how you can use these trend lines to, give you an idea of how much bigger the move is going to be. Right. So what we're doing here is we're noticing that, all right, each time it's making a higher high. We have a high here, we have a lower high here, and then we do get a nice little pullback. All right. And then if you measure it from here to here, all right, we also have a high, higher highs, but you can keep that same trend line going, right? So you can use this one and you can use this starting point as well and see that, okay, well, because if you look right here, we have a high, higher high, we have a high, higher high. So you wouldn't have really thought that it was a divergence right there. But if you just take the overall trend from the initial higher high, you can see that it still is a bearish divergence right here. Okay. Um, and basically you can do that from this high all the way up here to this high. And the longer it is, right, the more time that the divergence has been developing, generally the stronger it's going to be. So, if we look at this high down to this low right here on the pullback, that was about 50% drop. But if we come over here, okay, and we take a look at that move, I believe, if I'm mistaken, yeah, look, it's much, much bigger. It's a 75% drop, right? And because we knew that it's been developing, we have this original, higher high on the RSI. We come over all the way over here, and that's a very long time, right? We have from, what is this, November all the way to May. So that's like 6 7 months of a divergence developing. And that's exactly what I mean, right? You're going to see a much sharper move, or a stronger move based off of a much longer divergence, right? And that's where we get the 75% drop. Now, on top of that, all right, let's say you weren't even looking and you're just using this divergence, on a weekly basis, and you're just coming in and charting them, right? We have a high, higher high right here. We have a high, lower high right here. And then we also have the opposite of the falling wedge. We have the rising wedge, right? So we're consolidating in this period. We have a bearish chart pattern, and then we have a bearish divergence, right? That's a nice signal that we're going to, have a sharp downwards move, right? And as soon as we break that trend line, that's when we end up getting that 75% move to the downside. Okay. Now I want to show you guys an inverse head and shoulders. It's basically the opposite of the head and shoulders, and it's a really nice pattern, to spot and use. We have a left shoulder, we have a head, we have a right shoulder, and we end up coming up here and hitting those targets very nicely, right? That was a very nice move. There was a drop that was set up, that was signaled right here with a higher highs and then the lower highs on the relative strength index. And hopefully by now you've really started to notice that, wow, okay, well, these things are repeating themselves. There's multiple times in the history of the chart where there's been divergences, and each time, they ended up being really good signals for either an entry or an exit. So all you have to do is slap on your relative strength index and just start looking for higher highs, lower lows, higher lows. Just those simple terms right there can really give you an edge. And then once you get some more experience, okay, you can start trying to draw chart patterns. And some of the chart patterns that I'm showing you are very common. They're some of the more beginner friendly ones, and they show themselves plenty of times, right? So eventually you will be able to combine all of this stuff together and use it to your own advantage to again give yourself that edge in the market, right? Again, we can see right here, we have a rising wedge heading upwards. We break this trend line here, and then we get a very sharp move to the downside. Very big drop right there. And then what do we do next? Well, we start that bullish divergence again. And now we're looking at some of the more recent price action. And what we're seeing here is that we're making these lower lows, slightly heading lower in a downtrend. The token is dropping in price, but the relative strength index was on a very nice uptrend, right? And each time we touch this trend line right here on the relative strength index, we got a nice little pop. Okay. So you can never really predict how much of a move you're going to get off any given divergence, but it's always good. It's really good for swing trading, right? So you can come in here, you can use this where we have the initial low and then higher low. You enter here, that's a 30% move, right? You have to ask yourself, what are my profit goals, right? Am I bag holding or am I trading right now? Now, bag holding is something different, right? If you're holding for the next 5 to 10 years, it's going to be a lot different than trading. But if you're trading and you're able to come in here and in 2 weeks get 30% on your profit, on your trade, that's very, very nice, right? Or, if you don't want to take profit at 30%, you can just put a stop loss on, and make sure that you get stopped out in profit. Okay. Because again, you can't predict how much the move is going to be every single time. That was a 30% move. And then right here, that ended up being a 40% move. Okay. And then over here, that one ended up being a 35% move. Now, generally, as I said, the longer the divergence, the stronger the move is going to be. So we can see we have a low here, lower low here, much more extended. And we're seeing the relative strength index is still respecting this trend line. So what we're going to look for, okay, is we're going to look and see if we can hold this trend line right here from this initial low and higher low, right? We've bounced on it 3 times. We're trading just above it right now. If we were to break this bullish divergence trend line, we can expect the price of XLM to drop pretty soon, right? Now, what do we have also on the chart is we have a bear flag forming, okay? So we got our rising wedge to play out. We had a little rising wedge right here. We broke this trend line. We had the sharp move to the downside, and now we're doing that consolidation, that absorption period, okay? If we are going to break this trend line here, which is going to be roughly about 0.106, if we break that level, most likely we are going to head back down. But the thing is we would look for 2 things, right? We would look to see, okay, do we get a look below and fail and actually reverse? Because let's say we come down here and then once it breaks through this level, it actually bounces off of our relative strength index and continues heading up higher, off of that bullish divergence trend line. We could see that. Or, there's 3 stages to a reversal, and we are in stage 2 right now. There's your downtrend, there's your consolidation period, and then there's your reversal. Okay. So you're going to be looking for the bear flag to possibly play out if we break 0.107. And then if we break above 0.116, then we could be heading back up towards 0.13 or even 0.138, right? So that's basically it for today's video. Hopefully you learned something new. If you did, smash the like button, subscribe to the channel, and let me know what cryptocurrency, what ticker you would like me to analyze next and break down for you.